SpaceX reported earnings for the first time as a public company. Quarterly revenue $7.81 billion, up 92% year over year. In the same quarter, it spent $15.83 billion on AI infrastructure, roughly 2.0 times its revenue. Good morning, this is Ken. Kill the obvious misreading first. That $15.83 billion is not a loss. It is capital expenditure. The net loss for the same quarter was $541 million, 2 orders of magnitude apart. These are different things. So, 2 questions. How does a company with $7.8 billion in revenue spend $15.8 billion, and can it earn that back? The short answer up front, this is no longer a rocket and connectivity company. Accounting first, because mixing these up derails everything after it. Revenue is money received, $7.81 billion. CapEx is money spent buying assets, $18.37 billion for the quarter, of which $15.83 billion went to AI. Net loss is the gap for the period, $501 million. CapEx does not hit the income statement all at once. The equipment sits on the balance sheet and converts to expense over years. That is why $15.8 billion of spending coexists with a loss in the hundreds of millions. Operating loss also improved sharply, from $970 million a year ago to $143 million. But be precise here. Positive EBITDA is not positive operating income. EBITDA sits above depreciation. At the operating line, SpaceX is still in the red, and the net loss is still there. You cannot say this company turned profitable. Not from a good quarter. CapEx exceeded revenue. Revenue alone does not fund this. The actual sources are a combination: $85.7 billion in net IPO proceeds in June, $25 billion in notes issued, operating cash from Starlink, and future contracts. Cash, equivalents, and securities stood at roughly $100 billion at the end of June, up from $24.27 billion at the end of March. But that $100 billion is not free profit. Most of it was raised from capital markets and comes with obligations attached. Debt and finance leases now total about $39.3 billion, up from $22 billion 3 months earlier. The cash pile and the debt grew together. Do not look at one without the other. The segment actually generating profit is connectivity, which is mostly Starlink. Revenue $4.29 billion and operating income of $1.66 billion. That is the profitable pillar. Starlink now has 12 million subscribers, roughly double a year ago. ARPU is 66 a month and service reaches 167 countries. But be careful. Starlink did not fund the AI capex. Connectivity's operating income is $1.66 billion. AI capex was $15.83 billion. Different orders of magnitude. What Starlink provides is not the money, but the foundation, the stable business that makes raising capital possible in the first place. So, is there demand that justifies $15.8 billion? This is the most important part today. AI segment revenue was $2.56 billion for the quarter, up 2.47%, and contracted cloud services revenue stands at $14.1 billion. That is signed contracts, revenue not yet recognized. Do not confuse it with booked revenue. The counterparties are public. Anthropic, up to $125 billion a month, 3 years. Google, up to $920 million a month, but starting in October. Reflection, AI, up to $150 million a month. Notice what that means. The Google contract has not started yet. None of it appears in this quarter's revenue. The infrastructure being built with that 15.8 billion is what will generate revenue later. CapEx first, revenue after. That is why the ratio looks like 2.0x this quarter. CFO Brett Johnson also said on the call that in the first few weeks of Q3, SpaceX contracted an additional 6.7 billion of cloud services. Note the qualifier, that is over a 6-month period, not an annual figure. In a few weeks, contracts worth more than 80% of a full quarter's revenue. That is the demand management is looking at. That was the bull case. Now the other side weighted the same. Johnson said new AI compute capex is generating less than a 1-year payback. That is management's characterization, not a track record. 4 risks. Capex is heavy, 19.37 billion against a 13.12 billion consensus, with 2 more quarters guided at similar levels. Contracts take time to become revenue. Google starts in October and nothing guarantees the schedule. The competition is formidable. Selling compute puts SpaceX against Microsoft, Amazon, and Google, and on models it is the late entrant. And it is still losing money. The AI segment's operating loss was 1.257 billion. Step back. SpaceX's competitors used to be rocket companies: ULA, Blue Origin, Arianespace. Now look at who it sells compute to and who it competes with. It sells to Anthropic. It sells to and it competes against Microsoft, Amazon, and Google. The competitor set has been replaced from launch providers to hyperscalers. The numbers say the same thing. Space segment revenue 962 million. AI segment 2.56 billion. AI earns 2.7 times what rockets do. A rocket and connectivity company is becoming an AI infrastructure company. That is what this quarter shows most clearly. One forward-looking item. SpaceX announced it will co-design Starmind, AI satellite compute payloads with NVIDIA data center class compute placed in orbit. On Starship, Musk said the heat shield problem is, in his judgment, solved, and that he sees no technical obstacle to full and rapid reusability. All of that is management outlook and concept. Orbital data centers are not a committed business. No timing, no economics have been shown. What is interesting is the shape of the argument. Sell AI compute on the ground, fund Starship with it, and eventually move the compute itself into orbit. The reported results: revenue 7.81 billion, net loss 541 million, capex 18.37 billion, 15.83 billion of it AI. Starlink at 12 million subscribers. Contracted revenue 14.1 billion. Cash and securities around 100 billion. Debt about 39.3 billion. Management's outlook: a 100 billion annual revenue run rate by end of 2026, 1 trillion by 2030, roughly 10 gigawatts of AI compute by end of 2027, and sub 1-year payback on AI capex. All targets and characterizations, not guidance, you should treat as forecast. 4 things to check. 1. Whether the Google contract converts to revenue on schedule from October. 2. Whether the AI segment's operating loss keeps narrowing at the operating line, not EBITDA. 3. When capex levels settle. 4. How the gap between cash and debt moves. If you take one thing from today, This is not the quarter SpaceX stopped being a rocket company. It is the quarter its center of gravity moved. AI now earns 2.7 times what rockets do. The competitor set became the hyperscalers. And whether that spending earns itself back is entirely unproven. Living ahead of the future is not about being startled by a big capex number. It is about being able to trace, contract by contract, when and how that spending is supposed to turn into revenue. Google's share starts in October. Watch that line next quarter. That is it for today. If this was useful, a thumbs up really does help the channel. I cover Tesla, SpaceX, and the wider EV world from an owner's seat here in Japan, and I post new videos here regularly. If you are not subscribed yet, I would appreciate it. Nothing here is investment advice. Please do your own research. Thanks for watching, and let's keep enjoying life with these machines.
Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.